Hello traders, welcome to FreeFX. My name is Francesco, and I just wanted to kind of go back to the USD MXN idea, which I've discussed a couple of days ago in my video. And my position here is long. You might wonder sort of why. So I went in a bit early on this, so I'm obviously having a lot of discussions in my kind of head about whether that was right or not. I'm in drawdown, as you could expect, and it's kind of weighing a bit on my head, thinking, is this the right kind of move? But obviously, there's quite a lot of potential there. I think there's probably a really good mover that's gonna at some point it's gonna come up. When obviously, you have to kind of be careful not to destroy your account. Really, I don't really take big gambles like this anymore. But everything is telling me that this is just the right thing to do, to hang on a little bit longer before deciding whether it's a dud or not. So just going back to the idea, there's quite a lot discussed, so I'll try to be quick. This is the monthly chart. I put it on the line. As you can see, we're on this level, which is basically like a former resistance turn support. And if I can just kind of show you that level there, you can see that if you have a line chart with the closes on the monthly, and you take it down to these kind of two humps from this period, May 18 and April 19, we're just on the cusp of on that basically line there, and we're on the cusp of breaking it, but really it's quite a difficult level to break, because we looked at Fibonacci retracements of this move up in January, February during the pandemic outbreak, and then this is basically like almost a complete retracement, where I think the 23 mark, or rather, if you look the other way around, 76. But essentially, we are almost retracing that whole move down, and there's also this kind of rising trend line here. If you kind of wanted to actually draw it, it looks something like this, if you like, trend lines. And then you can draw it different ways. You can draw it like this and treat this particular one as a little dip below it. And then if you continue this one, you see that we are, again, there's quite a lot of stuff going on in that particular area. So I'd say probably we have a very strong confluence of technical levels there between the Fibonacci level, this long-term support from previous resistance that I showed you before, and this kind of rising trend line. And the general trend, again, on the monthly from the 100-day, 100 period moving average is on the up. So you can sort of construct different kind of ways of looking at the same chart, like a long-term trend line from here with these peaks, and we kind of come down from that. But essentially, and we could look at kind of mean reversion, that this is the bottom, that's the top of a channel, etc. But anyway, let's kind of leave it at that. What I was going to say was that I'm going to show you a few things as well, which may or may not sort of appeal. I'm going to move myself to the other side if I can. I can't. All right, so that's basically one idea. The other idea is that we have a correlation coefficient indicator. Now, that really kind of visualizes what I'm going to show you next, which is that we just have a very compact view in this way of just restore that of the relationship between USD and MXN. And if you kind of look at an article like this, for example, there's Reuters a couple of days ago wrote this about oil price kind of boosting the Mexican peso. And basically that's kind of one of the things, is the support in oil prices from OPEC, and the contention is on the correlation between the two. As you can see, negative correlation is almost down to a perfect 1. And in fact, it is down to a perfect 1, and here as well. So for this entire period from 2010 to now, so for like the last 10 years, for a decade, we've had great periods of perfectly negative correlation between USD MXN and oil, which means that if you flip this chart round at the top there, MXN USD is like a perfect correlation. So the oil and peso, Mexican peso, move together. So that basically means that if you take all of these together, a vast amount of time is spent between these two currencies as a pair and the oil in a sort of mirror version. But when we reach extremes, that doesn't last. So if you want to kind of measure that and see how long that would last, you can see, for example, from here to here. Okay, that's 18 periods, so 18 months there. And then if you do it again here, that's 20 months. And now 18 and 20, now we're in here. It would be a little bit, maybe less, obviously. We're into 8. So kind of extended periods of this kind of perfect correlation, and we're about sort of halfway through a typical period that we've seen in the past. In terms of the opposite, so when they behave differently, the opposite ends, so say oil going down and the Mexican peso going up, and we have these periods here which are still quite lengthy as well, so we don't have to ignore them. But we're in this period now, we're about halfway, so it could go on for another 9 months or so. We just don't know that, but we've certainly been here for 8 months. Okay, so just kind of bear in mind that as well. And then if we look at oil itself, there's oil there. Okay, now oh sorry, that's the ATR. Oil is here. Just hide that for a second. Oil is obviously coming up from pretty low levels. We've had the 2015 crash, and it came down to lows, and we've had more trouble during the pandemic. It's gone down to even further lows, down to sort of low 10s, 17, etc. So we're kind of up here in the 40s, and you can sort of start thinking, well, that was kind of previous support, is that resistance, and kind of construct a story about oil, look at OPEC, supply versus demand, speculative oil, futures, positioning, Brent versus crude oil, and all that. That's obviously beyond the scope of this video, but purely on correlation terms, that's something to bear in mind. The other thing, and I'll finish here, is this. If we just hide that for a minute and go to our ATR, and for the ATR, I'm just going to want to show you something there. So this is the average true range, and obviously we've got a huge peak there, but let's go down to, and we kind of stalled there, so we kind of had this huge drop, but the actual true range monthly is quite small. And if we just take it down to the weekly, you can see that as we've had this sort of move, the range has actually gone smaller and smaller. And if we take it down to the daily, see that decreasing range. I was going to actually do something else as well, which is we take that off for a second, and also just take that off as well for a second, so we can have a bit of space for our next, which is, so we're going to take that off and add another indicator, which is very important, but I'll actually show you on this. So this is the other one. This is the daily effects through IG, just because I can't put too many indicators on the same chart in TradingView. Now this is the RSI, as you can see. Just ignore these volume bars because they're from the retail traders, the broker's own kind of clients. It's kind of limited view. You can see the RSI on the 4 hourly there, and it's quite a lot of kind of leaning on that oversold level, in spite of price continuing its descent. But if we go down to the daily, you can see that we've basically had this huge drop, but RSI refuses to go lower, and we've had this kind of these peaks, but the bottom level is kind of solid. We're sitting on that, and essentially that hasn't really changed. So if we went down to the 4 hours again, just to show you, we've actually had a bit of divergence. If you look like here, there's a slight dip below, so it's almost like it's rising really rather than descending. So there's a kind of discordance there between the two, and clearly you can see that we have a disagreement between the RSI and then that's basically the view on the weekly. So since we had that huge rise during the pandemic, we come back to that level, and that kind of confirms that price is not really going any lower. We're severely oversold because we're in this area if you go back to the daily, and essentially when you get to these levels, we are at 29. Put that back down here. Yeah, 29.3. So that's pretty oversold, and we kind of expect that to do something in terms of reacting. Now that's the 20 level there, the red dotted line, and that's the 80 at the top. We have been down to these levels back here, and obviously that was January, start of 2019, and we reacted in the RSI, but price was pretty much flat for quite a long period of time. The last time we were oversold and we had a rally, we have to go back quite a bit, and it was down here 2012, and then we had this huge rally, but there was quite a bit of choppiness there before that sort of occurred. So it's not all clear when this will happen. It might be a longer wait than I'd like, but that's basically where we're at. And just to finish, because I think that's quite important, if I just give you another view, which is this. If you go to CME group Mexican peso futures, you'll see that it's inverted. It's Mexican peso versus US dollar. We want the December contracts. That's the December contracts there, and we have this view, which again is quite indicative of where we are. I looked at it this morning, early this morning, and I was kind of looking at that, thinking that's quite a revealing picture of what is happening here. Let me just kind of put that as a pop-up if I can. Should be able to. Just give me a sec. Pop-up. There we go. Okay. So in the pop-up, I'll show you exactly what I mean. If you take that into candles, I put it to the hourly. Now you can see there quite clearly, if I just get an indicator there. All right, and then basically just do that. All right, that, and then in a different color, let's put it as a green. Okay, so you can see that, put it as a green. You can see the difference between the rising trend line in the Mexican peso and the descending volume quantities there. So we've had this sort of, the hourly is a great tool on the CME futures. See around the morning, there's usually a peak happening at the start of the Chicago session. And this gives you a flavor for the rest of the day sometimes. So this peak here on the 19th, so that was last week, we had this peak, and it was rising volume bars, and through the morning price did react appropriately. The second peak we've had on the 20th, the next day, was actually a sell, but a few buy bars didn't really give us much lift from the previous day's high. And then into this week, we've had this little kind of buy volume peak into this morning. We're just not quite. See, we've got 4 hours to go to the Chicago start. But essentially, we have to see what happens when the Chicago start comes in, and see what happens. So pretty low volume. So this price feels quite feeble. And the fact that it's been decreasing volume every time with rising volume, this divergence basically tells us that we have potentially a very weak rally that is not substantiated by volume. So that's all I've got to say to you today. I hope that you enjoyed watching my video, and as I said, keep this monitored, see how we go, but decisive few days. This is Thanksgiving holiday in the US on Thursday, so the end of this week is going to be a bit weak. Just kind of have to wait and see. Watch out for any fundamentals, any news, but that's essentially where we are for today. Thanks very much for watching. I'll see you in my next video. Bye.